For decades, the United States maintained its position at the center of global trade, without always needing to rely on military force. Instead, it used its most potent tool, the economic sanction. The risk of being blacklisted by the U.S. Treasury was enough to keep international governments and major corporations in line with American policy. But that calculation is changing. Beijing has officially and publicly instructed its domestic companies to ignore U.S. sanctions regarding the Iranian oil trade. This isn't a quiet circumvention. By issuing this as a formal government order, Beijing is openly rejecting American legal authority over Chinese firms. This move suggests a shift in the global power dynamic, raising a difficult question for Washington. What happens when a major rival simply stops complying with the rules of the dollar? To understand the conflict, we have to look at the mechanism of control, the Office of Foreign Assets Control, or OFAC. OFAC utilizes the US dollar's status as the world's primary reserve currency. Since most billion-dollar trades and bank transfers eventually pass through American systems, the US can effectively block any entity from the global financial network. The US recently applied this pressure to China's teapot refineries, a group of independent private oil processors located primarily in the country's eastern regions. These refineries became targets because they were purchasing and processing crude oil from Iran, in direct violation of US energy sanctions. The goal of the US was to isolate these refineries, making it impossible for them to conduct international business or settle trades in dollars. This is a standard part of the American playbook for restricting foreign entities, but in this case, Washington encountered a new form of resistance. The response came directly from the Chinese Ministry of Commerce. The ministry didn't just tell companies to keep trading, they signaled that the state would step in to protect these private refineries from the consequences of American pressure. Beijing's legal argument is that because these sanctions were imposed unilaterally by the US rather than through the United Nations, they have no standing in international law. Beyond the legal argument, Beijing is offering a practical financial defense, a state-backed shield for domestic refineries. If a European buyer cancels an order for refined fuel out of fear of US retaliation, the Chinese government intervenes. The state provides capital to cover the exact amount, ensuring the refinery remains financially stable despite being blacklisted. By taking the financial risk onto the national balance sheet, China is attempting to neutralize the primary leverage the US has over private global trade. This is a sharp contrast to countries like India, which often follow US sanctions on Iranian oil, despite publicly disagreeing with them. For the Trump administration, this creates a situation where the usual tools of diplomatic pressure are producing limited results. Because China is providing a state-backed workaround, the United States is finding it difficult to achieve its stated goal of cutting off Iran's oil revenue. This leaves the administration in a difficult position for upcoming trade talks. If they can't enforce their sanctions on Chinese firms, their overall bargaining power in the region is diminished. It shows that when a large enough economy decides to absorb the cost of sanctions, the effectiveness of financial isolation begins to reach its limit. Many analysts suggest this dispute over Iranian oil is more than just a disagreement about energy. It may be a test case for future conflicts. Beijing is observing how effectively it can insulate its economy from the American financial system. If China can prove that its industries are immune to dollar-based sanctions, it removes a major obstacle to more assertive actions regarding Taiwan. The goal is to reach a point where the threat of economic destruction is no longer a credible deterrent against China's regional ambitions. By successfully shielding these refineries, Beijing is demonstrating that the US dollar may no longer be the final word in global geopolitics.